Hello and welcome. Thank you for taking time to join us for our webinar using TrueNet cost analysis to set and measure everyday low pricing. Before we begin, I'd like to share a few housekeeping items. If you'll let us know through the question box if you're having any issues with the audio or seeing the slides. Also, you can ask questions throughout the webinar and we will do our best to answer those questions at the end. We also invite you to follow PRGX on Twitter and LinkedIn at PRGX Global to get alerts on our upcoming webinars. Again, thank you for joining us today for our webinar using TrueNet cost analysis to set and measure everyday low pricing. Retailers in some regions are faced with establishing everyday low pricing targets and then measuring the effectiveness of that strategy. In order to effectively set these targets and make any needed adjustments, retailers need to be armed with the right information. In this webinar today, our attendees will learn how TrueNet cost analysis can assist by providing data related to products and categories, as well as information to assist in negotiating with suppliers to establish the best pricing and margin targets. We're pleased to have Jen Rowe, PRGX's Chief Analytics Officer, and Mark Irwin, Vice President of Audit Operations, join us to share their insights today. With over 15 years' experience, Jen joined PRGX to help grow the advanced analytics practice in 2019. He's focused on generating actionable insights for customers that aid in decision-making while utilizing the latest techniques in the field of data science and BI. Jen has a successful track record of building award-winning source-to-pay and analytics platforms with Accenture, McKesson, and Seal Software. Mark joined PRGX in 2016 and is currently VP of Audit Operations in Europe, where he leads our retail operations. He has deep knowledge of delivering recovery audit services to clients and has over 12 years' experience in senior operational leadership roles. Mark also has a passion for process and achieving the highest levels of efficiency and accuracy for our clients through the use and application of technology solutions. Prior to joining PRGX, Mark held the position of head procurement at Sainsbury's Bank. He's also a member of the Chartered Institute of Purchasing and Supply and has completed further studies at the London Business School. Welcome, Jen and Mark.
Thanks, Michelle. And we'll actually start with just a brief overview of the agenda. So first and foremost, we're going to go through what the heck are we talking about when we say TrueNet cost? You know, what does it give us? How do we calculate it? What's the purpose of it? And then we'll talk about sort of the landscape that we're facing today and how it applies to that, why we can gain value from it, why it's more valuable than ever today. And we'll talk briefly about how PRGX makes that available using our technology and our analytics. You know, why can we do this versus customers trying to do it themselves? And then, of course, finally, we'll apply it to some key use cases. First is the promotional effectiveness. Again, when we're talking about these TrueNet costs, promotion, and how it applies to cost and actual margin is really at the heart of all of this. So how do we really look at promotional effectiveness and sort of that related cousin, the everyday low pricing strategy, the EDLP, how does it apply to that? Customers who are trying to use it, set it, measure it, how can we in that strategy using the TrueNet cost and margin analysis? So with that, I'll pass it over to Mark for a second just to introduce PRGX, what we do, where we've come from, sort of our expertise and our sort of space in the space, and we'll get going from there. Mark?
Cheers, Jen. Thanks very much. So, so I'm based in the London office for PRGX and look after our retail operations in Europe. What we do is we're focused on returning lost profits for our clients, and we've been doing that for a very long time, 50-year history of returning those profits back to our clients, whether that be commercial or retailers, pretty much of every size and scale globally. And we do work with some of the world's largest and the UK's largest companies, and that also includes a large proportion of the UK grocery market. We have offices throughout the world and provide a truly global service for our clients. there's some big numbers on the slide around how much data we do acquire from our clients and the amount of spend that we analyze every year. So within our recovery audit programs, we do return around about, for 2019, $1.2 billion to our clients in lost profits. That identification is coming from recovery leakage. So core to our business is our ability to handle big data from our clients. When we're dealing with the largest companies, we receive large data sets, and we've been doing that for many years, and we receive, load, build, and then understand all of the complex data relationships across all retail sectors, not just grocery. Our experience is pretty much unsurpassed in the industry, and we have an amazing team in place who are passionate about adding value to our clients' bottom line. Jin, anything to add?
Yeah, thanks, Mark. And, when I was actually joining PRGX, with all the things that you just mentioned, the two things really stood out at me. Number one was just the accessibility and the breadth of the data that PRGX had, because, you're literally looking through $2 trillion worth of spend on an annual basis, all the information that were available to essentially build on and gain additional insights from. That's one of the things that really attracted me to PRGX. As head of analytics, I really wanted to focus on how do we now take that data and make that more valuable for our customers. And I think we're going to see one of those examples today. And the second bit is the attention to and the investment in the technology to handle that massive data. I think that's one of the key things that we'll see, and that really differentiates PRGX from others who, deal with customer data. It's just that we've built this purpose-built platform that allows us to ingest this massive amounts of data and allow us to use it and apply our analytics and data techniques and technology to it so that we can gain insight. So hopefully the folks will be able to see some examples of that today. So moving forward, the key topic for today, and this is sort of the foundational element, true net cost. We're going to hear that a few times. What the heck is true net cost, and what does it really give me? And put simply, for most of our customers and for most of the folks working in the S2P side of the business, cost is an important element of calculating margin, but oftentimes it's fairly simplistic. If you look at the left-hand side, it's essentially you have your sales cost, you have your sales price, you have your cost of that element, and you take the cost out of the sales dollar, and you potentially get the margin. And, in this case, on the left-hand side, the cost of this product could be calculated at $3.24. But of course, especially in the retail and grocery sector, there's a lot of promotional funding that is available at the vendor level, at the category level, even at the product level, all the different types. And on the right-hand side, essentially, is a simplified waterfall chart that shows you some of the different components that we bring into consideration. And so when we talk about true net cost, it's really saying that we have our sales element minus the initial cost, but then we're now adding on the elements of all the different funding types, whether it's off-invoice allowances, scan downs, bill backs, flat funding, et cetera. There are all these different components, and there are a lot of subcomponents underneath those names. And also each customer has their own set of promotional elements and groupings that we take into account. But the bottom line is that we are able to bring in the promotional element side of the data, marry it up with the sales and cost data at the product, vendor, category, regional level, and we're able to now calculate the true net cost. And in this case, the cost is actually lower for this product than we anticipated because of all the promotion. The promotion actually ends up lowering the total net cost, which is $2.97, which, as you can imagine, increases the margin. So this is a very simplistic view of what we're talking about when we say true net cost. And this is kind of going to be the foundational element that we use throughout the slides and the presentation today. Mark, I had assumed that you guys have a similar setup in the UK. I'm sure you call some of the promotions different names and different groupings, but I assume the concept is the same for you.
Yeah, exactly. I mean, retro promotional funding, rebates, cost price discounts, and promotional discounts on price. site and fixed fees and other sort of other product funding types come in to give that full picture of how the overall funding makeup is a product.
Yeah, and that complete picture is the key point here. And this is a picture of sort of a mapping of the visibility that most of our customers do have. And for most of them, you know, on the sales and cost of goods side, the picture is pretty complete. Most of our customers have, you know, great detail on sales, who and by, you know, by whom and to whom and what and how much, and all the information that at the sales level is pretty complete. And of course, on the purchase side, on the procurement side, that picture is fairly complete. Where the picture starts to get fuzzier for most of our customers is on the funding and on the gross margin side, because especially with the funding, the promotional funding, where the picture gets muddy and difficult is that promotions tend to have sort of a flexible life on their own. Oftentimes, promotions are kept in sort of in a different way by different vendor, by different category. Each buyer may have their own set. It becomes a little bit less accurate at the lowest level detail. And our job and what we do is we make sure we gather all the information, we standardize, normalize, calculate, we apply a lot of different rules and mapping to it so that we can apply the funding correctly at the product, at the category, at the vendor level, so that you can look at the margins and the true net costs at those different groupings and variability, so that we can get to this adjusted gross margin, this true margin at the different levels. So this is the bottom right, the box in gray, that the items in orange and red that are mostly limited or unavailable to our customers. That's the part that we really try to provide through this process, and which is really the valuable piece that allows them to make more data-driven decisions and be able to see things at a more granular level. Okay. Now with that, you know, just a quick mention of how we do it, and it's really just a picture of our technology stack. And I mentioned earlier that, you know, PRGX has spent millions in investment in the purpose-built technology. And, you know, we spend a lot of time on this and talking to our customers about this, but this really does help us do things differently. I just want to mention this quickly here. It's our Varigon solution platform, which is sort of made up of 3 different parts. And it really starts with the Epiphany at the bottom that really allows us to gather this tremendously large amounts of data quickly. And that's the main point. It allows us to grab it quickly so that it's available for both our audit folks and our analytics folks. And in the middle, we have our key platform piece, which is our Panoptic, that essentially handles all of our recovery audit. And that's the bread and butter of our business. That's our core functionality. So that's where the big things happen. And then my side of the business, you know, we handle the Lumen piece on the top. So how do we use the data that we've gathered, that we've processed, now that's available, not just for audit. So how do we now use this and make this more available and useful for our customers? And that's our top layer, and sort of, you know, that's the technology piece that we're sort of going to, you know, touching on a little bit today. The goal there is to make the information really valuable for our customers, and not just giving it back to them, not just cleaning it and handing it over. It's really taking a problem, applying the data to it, and figuring out how do we get the answer? How do we get the things that are opportunities, things that are discrepancies, things that should be surfaced to the top, and things that we should alert our customers on? And that's what we focus on in that Lumen Advanced Analytics piece. So just a quick mention of our technology. Now let's get to sort of our problem statements and what our customers are really looking for, especially in the areas of true net cost and margin, and which leads into that promotion, the promotional effectiveness and EDLP. So Mark, I'll have you go through just a couple of things that our customers have been asking for, and why we even started down this path of true net cost and, you know, margin and EDLP. So can you take us through the slide?
Yeah, and I think the areas where clients are generally looking for for support, and the sort of questions that they're asking really are around, can we get greater visibility of our supplier funding to give that true margin visibility? And by that question, it's not just about visibility, it's also about accuracy and completeness. How can we get that picture, and how can we get that quickly? So on the previous slide where you were talking about the technology stack, the epiphany element at the bottom is our ability to take in, ingest, and process mass amounts of client data quickly, and then make them available through those products that are visible to the client. Then that is a significant win for us in being able to ingest that volume of data quickly. So other things that our clients are asking for is, what is the split of funding types? How does it split out between the different types of promotional funding activity that we've got going on, plus also overarching sort of volume-based deals, etc. Being able to spread their funding out in that way is important to clients, and also within that split out is also how do we get visibility by company, by country, by banner, giving us that visibility not only just within country and within particular types of promotional activity, but also being able to compare and contrast across regions and across categories as well. On top of that, ongoing, what metrics will support, what metrics will we get visibility to, and what can you provide to give us a ongoing view of what the margin fluctuations are, because they do see that through new product introductions, through different flavors being added, and also D-lists, is maintaining that full view by category level and by product level is extremely important to clients. You can set your bars at one point, but then you need to be able to track and manage that over time. We have seen in the past where that can creep back into cost over a period of time if you don't manage it and monitor it closely. And then also, effectively, how are we performing? So, are our sales maintaining our margins going forward? So are we actually delivering back what we were expecting to do, even though we're seeing either an uptick in sales or a drop in sales?
Great. And so with that, we'll start jumping into the actual scenarios in a second. And essentially, at the end of the day, the thing that the thing that you mentioned, Mark, the speed is, I think, one of the key things that our team focuses on. With all these information available, I think it's only useful when it's given to you when you need it quickly, without having to. Because I've worked with customers where they're calculating a lot of these sort of on their own as needed, and it's a lot of work, a lot of time, and they don't just have the information as needed. So our goal is to make sure that the information that's necessary is available on an ongoing basis as needed, as quickly as possible. And so that means we're pre-calculating all of these. We're making sure that this is basically available as needed. And once you have that information, the two pieces that we'll get to during the session is, again, how do we use this information to look at effectiveness of each promotion? And also then, how do we apply this analysis and this foundational elements to help us move to the everyday low price strategy, or how do we do it better, or how do we maintain it, and how do we measure it on an ongoing basis? So that's what we'll look at in just a second. With that, we'll start going into scenarios, sort of what we're seeing in the market, what our customers are actually facing, some examples. So this is scenario one, and I'll start with the picture on the top right. This is the picture of the sales last year versus this year, and this is a kind of a common scenario that we're seeing with a lot of our retailers and grocers during the period of COVID, where people are in their homes or not able to go out, and they've essentially sort of resorted to, ordering, or, instead of eating out, buying things at the grocery store and doing things more at home, what the impact of that has been on the sales side. And you can see during the first 5 periods, the dark blue represents this year, light blue is last year. There's been a sort of a dramatic increase on sales period over period. And if you look at the chart on the left, sales essentially has been up 23% year over year during the same period since last year. Of course, the cost is up as well. In this case, the margin looks like it's quite a bit up, quite a bit higher. So looks like everything is great. And if you look at the bottom right chart, this is a way that we can do it for, again, each category, each vendor, or even each product. But just a quick analysis on a comparison on, you know, what was sold and what were the promotions last year to this year. And we'll get to the detail of this soon. But overall, the thing that was happening was that because of the increase in sales, things looked pretty good. Things look like, you know, everything is up. The cost, of course, should be up. Funding should be higher. Margins should be higher. And, you know, the numbers, if you look at it traditionally, just a year-over-year comparison, yeah, they all kind of tracked. But then you start seeing some odd things where, for example, in this case, the funding is down. Scan down is down. So things are starting to kind of bubble up where things doesn't look quite right. You know, with the increase in sales, why are some of these promotional elements down? They shouldn't be. They should all kind of track along with it. So that's where we start to see some weird things happening, and we want to get into the bottom of this and figure out where things are sort of hidden over by this, you know, dramatic increase in sales. And that's one of the first things that we try to do. Number one, if you look at the picture on the left, sort of this is what's going on, you know, this year. Because of the top line, because of the increase in sales, you can see the cost is kind of tracking along with it. The margin is certainly, you know, higher than last year. But if you look at funding, it's sort of staying flat. It doesn't have the same trajectory as the others. So you sort of have this feeling that it's not following along and that we're sort of not getting the funding that we should be or we're used to or at the same rate. And if you look at the right-hand side, so this is the number that we start to normalize on a per dollar basis, so as a percentage of sales. And you can see a sort of a different picture starting to rise. And the key thing that we're going to focus on here, there's a lot of things that come into this, but the key thing that you should see here is that the funding is generally down as a percentage of sales since last year. And this, right now, this is an aggregate. And when we start to dig into specific categories, specific vendor, the picture is even more dramatic, right? So number one, sales, large changes in sales and even cost has a tendency to sort of cover over a lot of different things, that, you know, may pop out normally, but because of the dramatic changes in sales, our customers and our partners were not seeing some of the things that would be of interest, would be of opportunity, would be things that they would be paying attention to. So the question is, how do we get to those things readily and quickly in an informational way? And so there are many different ways that we provide that sort of insight, but this is just one very visual one that I'll start off with. Essentially, you know, we have two axes that we've plotted, and this is as a percentage of sales and what we call relative change. And so even with the dramatic increases in sales, you know, we want to know as a percentage compared to last year, comparing apples to apples, you know, where are we doing better or worse, both in margin or funding? And in this case, we're looking at the category level. So basically, to sort of explain the picture, explain this graph, and once you understand the picture, the picture becomes very informative and clear. Everything on the right-hand side of the axis basically says we have better margin than the same period last year for the category on a relative change. Dollar per dollar, apples to apples, we're doing better. So you can see all the elements that are in green have a positive net change, whereas on the left-hand side, all the items in red have a negative margin shift from last year. Quite a bit different than sort of that overall picture that we were seeing where it looked like everything was going up. But of course, in real life, you know, at the category level, at the vendor level, at the product level, there are different things mixed in, different things being aggregated. The question is finding the ones that are of most interest, of importance, and getting to them quickly. And so along with that, though, the top quadrants essentially have a positive funding change. So things that are at the top have a higher funding per dollar since last year, whereas the ones below actually have a lower funding apples to apples versus last year. So what this means is that we're focused on quadrant 3. this group basically is the ones that are the most problematic. This basically are the groups, and especially the size of the circles represent the overall sales. So the bigger circles means bigger problems as well. The ones on the bottom left, the third quadrant, basically says we've essentially lost funding in these categories, and we've essentially, because of that, and in addition to that, we've lost quite a bit of AGM dollar per dollar since last year. So these are really the ones that we want to focus on. I have encircled, and we can get to these categories quickly, and that's where we're going to jump into. And if you look at the next slide, once we jump and highlight some of those categories, this is something that you would see. You would see very quickly that, the top two lines, the one in the purple and the green, that represents the sort of the month-over-month funding rates, funding percentages for 2018 to 2019. So you can see it sort of hovers around the 15%, 14.5%, that percent mark, and sort of it stays relatively, on point. But then this year, through the first 5 periods, you can see it dramatically drop. All right, so this is essentially some of the pictures that we've been able to pull out literally within seconds or minutes of working with our customers, working with their data to show that, look, there are areas where you have dramatic changes in funding. You need to be looking at that, figuring out if this is something that should be happening. How do we talk to our vendors to remedy this? What can we do about this? What should we do about this? And step number one, of course, is always identifying it and figuring out where it's happening so that we can take additional action. And so one of the ways we allow that to happen or really speed that process up is how we present the data, how we present the information. And the slide's sort of full of information and numbers, but I'll keep it very, very simple. The key thing that we do as a comparative tool is not only do we look at year over year sales and cost and funding changes like we've done and we've shown before, but the key there is to look at the relative change and the unit change. That allows us to really compare things, last year versus this year in a very comparative level. That allows us to look at it as a per dollar or per unit basis so that we can see if things are actually going up, or if, at the dollar level, unit level, things are actually heading downwards, which allows us to really identify where some of the key challenges and problems are. So when we calculate everything this way, when we present these things at this level, we can even, start to stack rank which has the biggest relative drop or the biggest unit drop, and thus, really signifying and highlighting where some of the major changes are. And when you do it that way, we can also start to calculate the overall impact of those drops, overall impact of those AGM changes, of those funding changes, and really start to highlight and bring to the surface the key vendors, key categories that are the problem areas. Okay, and just, as a quick example here, this is a example of a category that looked okay. Sales was up, funding was up, AGM was up. So you can see on the chart on the most left side, the funding looks like it's up 9%. The gross margin's up 40%. So everything looked okay. But when you get into the relative changes, you can see that the funding as a percent of sales was down 2%, which was basically saying that our margin should have been higher, but it's not. And also at the unit level, the funding per unit is also down a cent. So again, our funding should have been a little bit higher, and so with that, our margin should have been a little bit higher, but it wasn't. So again, not taking anything for granted, we're able to sort of highlight even the things where things are sort of close together and normally wouldn't have stood out. We're able to identify and alert and show you what the sort of the impact would have been. And along with that, we sort of can now take that information and jump into this concept of promotional effectiveness. Okay, so promotional effectiveness basically says, when you have all the information for each of the promotions that you run, for example, let's say you run different promotions on a week-to-week basis, and for the product or for the category or for the vendor, you're tracking all of those information for that week, for that promotion. What were our unit sales and what was our cost and our sales and our margin. when you can calculate all of that at the incremental level. And so each of these dots essentially is a pictorial representation of how we're doing with each of those promotions. And you can see in this chart, a chart on the left, going to the right basically means that we have additional incremental sales based on that promotion, and going to the top, we have additional incremental margin. So obviously the things that we're looking for, things that have the most effectiveness is, going to the top right. That's the ones that really have the incremental margin and sales that we're looking for. And when you can start plotting all of these things, and when you can start comparing one point to another, which is a goal, and comparing multiple points across the same product or across the same store or, across different seasonalities, different brands, banners, vendors, categories, that's where you get to now compare A to B to C and see which one worked better, which one had a better incremental increase or better unit increase or the desired effect that we're looking for. And I have a chart that sort of very simply kind of illustrates that point. Let's say you have a product, and at the top line, it's the performance of that product when it's not running a promo. The number of units that we sell per week, the price that we sell it at, the margin that it produces, and sort of the total margin. Let's say we run 3 different promos, and of course, there are going to be many, many others, but in this example, let's say we're running 3 different promos, 3 different time periods, and you can see the sort of the units that we sell, the price that we sell it at, the margin that it generates, and sort of the total margin. So promotion 1 has a slight increase in unit volume. The price is lower, the margin significantly higher, and it shows you the total margin. Promos 2 and 3 sort of have different strategies, different pricing, and different effect. Right? Promo 2, the price is the lowest. We have the greatest amount of units, and units increase in that week, but you can see the margin's way lower. And of course, the total margin actually ends up being quite a bit low. And so promotion 3 is sort of a different impact. So by looking at each of the promotion and each of the product in this way, being able to be looking at it this way, you can kind of pick and choose what you want each of the promotion or what the target is. Are we looking for the greatest increase in margin? Are we looking for a better unit and volume increase? Are we looking for, and this is where some other information, other data points have to come in. Are we looking for customer loyalty or the same basket increase? These are some of the things that we additionally add on, but at the simplest, just looking at the information and the data, we can start to show where is the highest effectiveness for the margin side, or where is the biggest effectiveness on the unit drive side. So you can see we can sort of paint a different perspective and picture for whatever your target is in this case. And this is a part that we're continuing to evolve and get better at. The next step for us is to be able to use this type of information and be able to be more predictive. If we apply promotion X or Y or Z for this product at this period, at this price target, you can expect, effects X, effects Y, effects Z, and that's with the data, with the measuring of all the different changes, that's what we're going to be able to get to, and that's what we're kind of actively working on now. So just an example in terms of promotional effectiveness and how we get to that using, again, true net cost and margin analysis and having all this great amount of information quickly at your fingertips. And now jumping over to sort of the last question, and Mark, I'll ask you here, for EDLP, for everyday low pricing strategy, we can already see that this type of information is going to start feeding into that strategy and how we help our customers run through that process. What are our customers trying to do with EDLP? What are some of the needs that we can help them with? What are they asking for? And then we can sort of jump into that world.
Sure. Yeah, and I think on the EDLP side is just getting to that base point of what a product is actually costing. The complexity of the promotional funding, the moving around of sales volumes and I suppose the fluidity of the data as well is being able to pull all that together to understand exactly where should I set my price point for an EDLP approach is where I think our clients face the greatest challenge. Our ability to pull that data together and have that data available and ready back to show and demonstrate to clients how we calculate that, I think is key to being able to make quick decisions on it as well. So, you referred a minute ago to sort of the changes that we've seen over the COVID period. And actually, there was some statistics shared around that 31% of total sales have generally gone through promotions, and that fell to 25% in April. So effectively, that was lost sort of promotional funding, promotional income that was coming back into a retail group that's already seeing very squeezed margins. Where did that go, and how did that impact, particularly when retailers have had higher costs of operating throughout that period as well? So I think getting to the true value is key for clients in being able to set those sort of forward-looking price points for the business. The other thing I would say, just to put a bit of history behind sort of EDLP, is at the moment it's well publicised in the UK press that a number of grocers are moving towards an EDLP strategy. It tends not to be an overnight thing, whether it's by category or within specific areas of the business. It tends to be a staged or a phased activity, because obviously there's work to be done with the supply base to go through that exercise of understanding what price point to set it at, or what cost point to set it at going forward, based on factoring in generally a look back of 12 months to the previous 12 months activity, factoring in everything that is known into that price. Now, I would say that retailers are highly dependent usually on suppliers being able to provide that information to them. So rather than being able to validate that themselves necessarily through the availability and access to all of the points of data that feed into setting that cost price, there is a reliance and I suppose a certain amount of trust also placed on suppliers to be able to share all of the information that they have in their business, and then it's a mix of the two. Having access to this information puts the power back, I would say, in the retailer's hand to be able to be more specific around where that price point should be set. EDLP is effectively sort of the shift away from high-low pricing, and there was some bad press a few years ago around sort of consumer confusion on on promotional activity and the actual true price of goods that consumers play with, particularly multiple overlapping deals, and that feeds into complexity at the back end in data with clients and being able to allocate and understand how that funding is spread on a category and a product basis. We have seen bog-offs reduce to the buy one, get one frees, and we've seen a shift into multi-saves and price discounts. And just recently, we've had some legislation being introduced by the UK government, which means that they're going to remove the ability to promote unhealthy goods. Again, how are retailers going to be able to calculate with the degree of accuracy that they need to be able to protect their margins, how that information is going to flow through to setting that correct cost price. I think sort of the final 2 points, say going on about the EDLP position, but rise of discounters has pushed the market towards having, a fixed low price rather than moving towards the sort of high-low pricing that we talked about, and they are increasing their market share with sort of a double-digit increase expected within that group, and particularly in grocery over the next 2 years. And whilst the EDLP has been cyclical in the past, it moves in and out. I would say that, in the past, that strategy has probably had some casualties, but it feels more like in the market now that it's it's more here to stay than it is something that's going to be faddy, if that helps. So I think it's just, what this does is it just helps our clients get it right first time in terms of price, because the movement onwards of that is very difficult to track if you start from the wrong base. Sorry, Jen.
Yeah. No, that's really great. Sort of look into how our customers are sort of trying to move into this space or moving into this space and where we can help. So let's sort of give an example, a couple of different examples of how we sort of aid that process. And the picture that I have up is sort of one of the things that we've used and seen quite frequently when we're trying to set that target and find the target. So number one, it's important to be able to see at the vendor category, product, at the UPC level, what the historical changes in price and unit cost and margin and funding have been in the past, so that we can find the products with the right margin and with the right sales and cost, balance to make sure that this is a product that we want to move into that space. Normally, I think you said that customers really take this on at the category level, and that's usually because to do it at the product level or the product variances, it's just too much information that's involved, and so they take a wider brush and it's moved in at the category level. We certainly aid that process, but also you're able to even literally look at the product level here, where you can make sure that, number one, we can see which products and which categories and which vendors are the right targets for us to start with and move into and adjust from. That's number one. And of course, setting that right price, knowing that overall trend and historical prices and cost and margin and funding, you're able to now set the correct price to begin with. And of course, by, constantly comparing against the baseline, against history, against trend, you're able to sort of adjust as needed from there. And so the example of that here is, using this information. Number one, we set the target, we found the product, we found the categories that we want to move into this strategy. And let's say step one, we've set this everyday low price for this particular, product or category, let's say. You see the flat line now happening for the sales. We've set this sort of this everyday fixed low price. And so now when we continually measure margin, are we maintaining it? I've just provided an example where the margin actually slightly dropped versus where we sort of expected it to be. So if the margin did not maintain, and if it's a little bit lower than what we would expect, what can we do about that? So number one, because we have access to the cost information and the funding information, so what can we do to sort of make that up, make that back, bring it back to baseline, bring it back to a point where this pricing strategy makes sense for this product or category, negotiate lower costs with our customers. Vendors, using the data, using the information, increase or swap the funding or the different, the dollar type. Obviously, we're not running promotion, but there are different funding elements that we can bring in that helps us, make us a little bit more whole. And the goal here is to get the margin back to the baseline. And this type of activity and this type of action is available, again, because we have the data points and because it's available readily and quickly, and because it's available in all sorts of different data permutations and data combinations. And this is the type of information that we essentially make able for our customers when they're setting their EDLP strategy, as well as when they've entered and they're going through the process and they're measuring against what their target was, and also looking forward what it needs to be. So you can imagine that data becomes a critical part of how they run their business, how they calculate their pricing, as well as how they negotiate and work with their vendors.
Hey, Jin, I was just going to add to that, is that I think that getting it right first time and setting your price point or your cost point right first time and factoring all the data correctly is crucially important. And then, from a perspective, if your move is towards everyday low price and you are setting that cost price at the right level, then the data that goes into this can help you do that absolutely, and being able to validate that. But the second part of it is the post angle in terms of compliance. If you have moved EDLP, then you are able to check the performance of that price and whether you are actually getting the margins that you were expecting to get from those products on an ongoing basis through monitoring and compliance against sort of the agreements and the pricing that you put into place. And I think that's of real value, particularly when you're looking at complexity that goes into the setting of the price is with so many variables, and if you set it at too high a level, any of those variables move and you start to lose margin immediately.
Yeah, great point. So thanks for the customer insights throughout, Mark. That's been really valuable. So we'll end up with a quick webinar summary, and then we'll take some questions from the group here. So number one, again, just the fact that PRGX really relies on our access to this massive data platform that we purpose-built to help us, run this type of analytics that normally isn't available is something that we're really sort of hang our hat on in the analytics side. It's something that is unique, and especially in my experience, it's something that we really do well. And the way that we're able to now use the available sales cost promotional information, even especially in times of large sales fluctuations. This year, the sales dollars is way up, and we need to know how to make sure that we're getting the same value from our vendors, that it should be tracking along with those sales. And obviously we're taking into account the different shift from the promotional to regular products, and we have that information and data available for our customers to make the right decisions. And imagine next year if things start to go back to normal and there's a different shift that happens, well, you're going to need to have the same type of analytics and insights available for a different potential sales move and sales shift. And so, this is a thing that's going to be useful and it's critically important in terms of promotional effectiveness and pricing effectiveness, and looking at the key changes and comparing it to apples, so that you can use data to set pricing and work with your vendors. And finally, this information, when it's available readily and quickly and in a highly interactive way, this allows folks to really focus on getting the value for their customers and their organizations, by driving the right promotions and driving the right EDLP strategy, and do it in a very data-driven way and do it quickly. I think that's something that is something that we really focus on. We want to be able to help our customers use the data and gain insights as quickly as possible, and that's something that usually really comes across through the platform that we build for our customers. Mark, anything to add before we jump over to the questions?
I think the only other thing is the importance of that ability to take these big data sets and being able to turn them around quickly for clients, understand, interpret, link. In a lot of places we're doing this already for a lot of clients, in the UK in particular, but globally we do it. And actually the value in that, the understanding that we already have in the business about how to do that, makes that an even faster process for clients.
All right, terrific. Michelle, we'll pass it over to you for a question. Looks like we have a few minutes here. Any questions that we can answer?
Sure. Thank you, Jen and Mark. So we did receive a couple of questions, and just in the interest of time, I'll ask maybe one or two. So how are you all supporting any clients with some current TNC projects, and can you share the value that they're getting out of it?
Yeah, so I'll just share like the one of our latest ones we just finished, which was highly successful, with tremendous customer feedback, and really the key thing that I sort of stress on, and what we continue to hear from our customers, is the speed and the ease of access. And I think that's number one. With all of this data, with so much data, oftentimes customers do have the data. It's just, how do we use it? How do we calculate it? How do we make sure that the people who need it have access to it readily and quickly? And that's the part number one that we make available. Our platform is, again, this mass data platform that allows access to this, insightful information quickly. My job is to help our customers find really the interesting stuff that is of opportunity, is of value, the things that are spiking, trending, gaps that are of value quickly, and bring it to the surface, So number one is, they're really finding great utility from the speed of it all and just having all that access. But then, of course, as we make these opportunity hunting and value finding easier, I think the biggest and best testament to how well this works is that, the last customer that we did this with, they essentially are making this the center of their category strategy. So essentially, for their category strategy process, they've essentially told all their buyers to go to their vendor and category groupings and essentially come back to the session with 2 to 3, key findings that you found in the data that we're going to be able to take advantage of or reduce or increase and negotiate. So essentially, they're basically making this part of the overall category strategy and the underlying way that they're essentially running their business in a very data-driven way. And I think that one was the biggest, endorsement of what we're doing well. And that customer is continuing to work with us to help, they now want more insight and more information, and we're helping them sort of continue to climb that journey and getting access into that information so that their buyers are more informed and working faster and working in a more data-driven way. And rather than hunting and pecking for the data points, they're really focusing on their actual core capabilities, which is working with the vendors, setting the right pricing and strategy and promotions so that they're generating the maximum value.
Great. I think we might have time for another quick question. Can you talk about any of the challenges that are faced if you are embarking on a program?
Yeah, and I'll be completely frank here. Always the biggest challenge is if the data is not available, and that's always the biggest problem that we have when we're working with our customers. If you have the data, if you have of course, sales and the cost and the promotional data. It doesn't have to be all linked together. It doesn't have to, be in the same format, normalized, et cetera. But you must have it, of course. It's tough when our customers don't have the necessary information and, they need help. And for us, I think that's our biggest sort of, a tough area to help is when they don't actually have the necessary information to be able to do what we do. So, the promotions aren't kept in a way that allows us to, and, we have lots of different techniques and ability to really map the promotions down to the product category, vendor, store, banner level. But if they don't have the information, for example, if all the promotions are stored in by different people in different places like emails, that creates a challenge for us in terms of getting the necessary data to provide the insight back in the way that you've seen here. So as number one, make sure you have the data and make sure that it's stored in the right place so that even if it's not all tied together, we can do that work, but it needs to at least be there. So I think that's one of the main challenges that we've seen in terms of getting to that point. But if you do have the data, good news is that we can do the work to make sure that it's getting to the value points that you've seen here today.
Great. So I think that's all that we really have time for today. We just wanted to thank you all for attending the webinar today, and a big thank you to our speakers, Jen Rowe and Mark Irwin. As a reminder, this recording will be added to our PRGX website along with other on-demand webinars. We do have additional webinars scheduled over the next few months as well, so be sure to check out our website, prgx.com, for information on those. If you would like to know more about true net cost analysis and how it can help with your EDLP strategy, or to speak with a PRGX expert, please visit our website, prgx.com. Thanks again for joining us today. Have a great day.
Thank you.
Thank you.